Hey, good afternoon traders. This is Trader Tim from E-mini Mind bringing you a trade recap video for the week. Today is the 28th of April, and we had a kind of slow grind, if you will, this week, in the sense that we had small body candles up until Wednesday's FOMC meeting announcement, and then today, Thursday, again, kind of small body candle. So when I say slow grind, I'm going to flip to a 5-minute chart and show you some breakout setups. And we had some really nice activity grinding, in the sense that we were slowly moving one direction and then slowly moving in the other direction. So this is Tuesday. We had our live trading session in the morning. The trading room was open Tuesday, and we were talking about the 5-minute and how when the market opens, we can wait for a couple 5 minutes to form, and then look to take a long above the high of the lowest bar in a pullback, or take a short below the low of the highest bar in a bounce. So Tuesday morning, there was a long above highs that took us up to basically what ended up being the highs of the day. And one strategy is to take low of high bars and high of low bar setups that are within a trend. Another strategy is to kind of trade counter trend and just go from one setup, getting long down here above highs, and then once your stop gets taken out, so if you were to trail each 5-minute candle like we do, once your stop gets taken out, you could essentially reverse that position, and now you're short. And then you ride that trade down, trailing your stop above highs, all the way down to lows. When we get into certain situations like this, where we have basically what I like to do when I'm trailing my stop is wait for a break of the prior candle's low before moving it. So this candle over here would not force me to change my stop. In this case, the high is the exact same as the previous candle, but if we have an inside bar, I don't tighten my stop on that inside bar. I wait for a break below lows if we're getting short, or if we are already short, and vice versa for long. So that same scenario, once again, was really good on Wednesday. We opened up and we formed a high. So we had in the first 10 minutes we had a bounce, and it was just a matter of shorting below the low of the highest bar in the pullback, in the bounce. And then as we start to sell off, just take your stop from -6 and then go to the next candle, and then when the next candle forms and breaks the previous candle's low, take your stop and move it down, and you can just continue to do that all the way down. So here's a really good example. This little bar right here, the stop would be above the prior candle's high, and this next candle didn't break the candle's low, so I wouldn't move my stop until it breaks the candle's low. And so sometimes you'll get an inside bar where, or a couple inside bars where you'll see the next candle broke the previous candle's high, but we're still within the larger initial breakdown candle. So I would just wait to trail my stop until over here, take it from highs, move it above this candle, above this candle, above this candle, eventually getting taken out right above this high. So then in the afternoon we had the FOMC meeting announcement. And then into today's trade, we didn't really get a pullback off the open. We just opened from the 5-minute bar and took off. You can bracket the 5-minute bar in the sense that you put a buy stop above highs and a sell stop below lows. But a lot of times what happens is you get this kind of a scenario where the first 5-minute bar opens, you end up taking a trade off that bar, and then the very next candle or within a couple candles we automatically reverse. So I'm not a huge fan. I've done a fair number of statistical testing with that, and it hasn't excited me too much to take that every single day versus letting a little bit of a move happen and then taking the break of the low of the high bar in this case down to, in this case it wasn't a very big move, but you get out for, say, in this particular setup, because we didn't go very far, maybe you get out for scratch and then you try it again in the opposite direction, and maybe you get a little bit of a move. They're not always going to be 5, 6, 7 points like this, but over the course of a week, you might have a couple that get a few points, couple that are some big winners, maybe a couple scratch trades. So it all starts to add up, and that's just one method. So that's the breakout method, and then the other method that I use to intraday trade is the retracement method. So a nice pair of methods. And if we were to flip over to the retracement method and just start drawing from highs to lows, you can start to see really nice setups that end up taking us down with a lot of momentum or up with a lot of momentum. But in some of these situations, you don't get a retracement, or you don't get a move all the way back to the 50. So that's where the breakout setup is really nice. You can combine them. You can draw up a Fibonacci retracement and then wait for a candle to approach or hit the 50% retracement, and then take a sell stop below lows for a short or a buy stop above highs of that candle. But sometimes, especially on the ES, it likes to move sideways at the 50, usually right at the entrance of the trade if it doesn't rip right away. So sometimes you can get shaken out before the move actually materializes, but I've had a lot of traders talk about using that kind of a combination of the two, and it works really well for them. So on the daily chart going forward, we've got a nice 50% that we're sitting in. Came down, basically to the tick today, so we'll see if it holds, and we'll see if it takes us up to that 21-23-ish level. And we've got some support back here. We also have quite a bit of consolidation back here from the end of 2015. So that's what we'll be looking for going forward. Tomorrow we may get a move, we may not, but certainly going into next week, I would be looking for either a swing high break or a 61.8 failure to break, in which case this swing low back here would be a very important level. So if you have questions, feel free to shoot me an email, tim@eminimind.com. If you want to get in on the live trading room, which will be every Tuesday for the morning session, you can become a member of the eMiniMind VIP area. If you're already a member, the trading room is just an additional part, and the link is right in the member dashboard. So if you're new and you want to check it out, shoot me an email, and I can get you a link to try it out for a week for just $1. So let me know if you have questions, and we'll talk to you soon. Thanks a lot.